Hello everybody, welcome back. We're going to make a quick video this morning. Tomorrow I'll be back home, nice computer, fresh view, all the indicators you could want. Also doing a Patreon for the live stream, a live stream for the Patreons tomorrow. If you want to join that, there'll be links in the description below. But today I'm still stuck on the laptop, still on holiday for my last day. So let's knock this video out. Not too much to say. There was a bit of a battle taking place yesterday to see where the weekly is going to close. The weekly closure was basically green. For what it's worth, it's not too bad. It's not a hammer, it's not a spinning top. It did close green, but if you think about the week before, closing down here, all the way down towards the bottom of the Bollinger Band, last week closed, we're just focused on candle bodies, not wicks, more or less closed the same. And obviously it's only early, but Monday has opened up at this area. So it is sideways really. It's not closed massively down. It closed green. Focusing on the candle bodies, there's about $1,000 worth of price action between 58,000 and just short of about 59,000 really. So it was a sideways week, although the volatility was extreme. It was an amazing week actually. Even me while I was away made some epic opportunistic trades. But as far as we can see right now, based on the daily, we're below all moving averages once again. That Deathcross basically will likely confirm tonight. I saw some comments this morning on my yesterday's video about the Deathcross, and yeah, Deathcrosses are a lagging indicator. All moving averages are lagging. It's not they're not the fact that there's a Deathcross or a golden cross isn't the indicator itself. That's never what I use them for. So if you think about this, right, moving averages are a guide of support and resistance in the form of trend. And when the trend begins to come to an end, they start to cross below each other or above each other, whether you're going from a bullish trend to a bearish trend or a bearish trend to a bullish trend. And that's all it is. That's all it is. It's showing a strength of trend continuing. And so one of the major signals of a strength of trend continuing would be either a golden cross or a death cross. So it's not anything new. Obviously, you wouldn't say, "Oh, I'm flipping bearish now because we're getting a death cross," but you would bear it in mind to think that, all right, there's a death cross formed. That's going to be a much stronger resistance now than it would have been if it was a golden cross, than if it didn't happen. So an example of that is what's happened on this 4-hourly. Okay, so let's think about the examples here. So this is how I like to use golden crosses or death crosses, or how I wouldn't say how they should be used, but how I interpret them. So here's the 4-hourly had a big move up. We're already bullish. We're already going up. The golden crosses on the exponentials took place here, and the simples took place here. Now I always say, if there's a golden cross, don't buy the cross. That's ridiculous. Just like you wouldn't short the cross itself. It's just a sign of strength or weakness building, continuing. So you can see that the golden cross took place here. It would have been okay to buy that, to be honest with you, but that's not how I'd ever do it. You wait for a retest, preferably of the 200, exponential in this instance. And there's your golden cross retest and a bounce all the way up to 70,000. That's actually quite good, really. It's pretty good that there. But then after that, rejection down. We found a support on the 200. Bit of a bounce. It wasn't too bad. We bounced from 62,600 all the way up to 65,700. So several $1,000 bounce, but rejected in the center of the Bollinger Band. And again, this is just a 4-hourly. But I'm just showing you that the golden cross was a strength of trend, and the retest was genuine, and it moved all the way from 63 to 70. The rejection took place, and then we broke down, and since then we've now got death crosses. Look what happened. It's the exact same, just in reverse. There's your bounce from the 200 exponential up to the 70,000. Here's your rejection from the 200 exponential down to, well, your guess will be as good as mine. So if we're going to base this on horizontals, there is some price action sitting around down this 57,250. We've got this wick. You've got these resistance levels. They do correspond mostly to moving averages, so it's not as horizontal as you might think, but it does exist, and that support is going to be around 57,250. So that's what we'll be looking at here. So it's the opposite of a golden cross. where the strength was building and the retest took place, went on to a new high, well, a new local high. Now we've gone to a low, retested. You generally would expect rejection from it. We sort of retested it again yesterday, and we're looking for a horizontal retest now, which again I think is going to be down towards 57,250. Now, that's Bitcoin, and the market will follow Bitcoin most likely. So if we just move over to the US 500, it's the S&P's futures market. This is still doing the daily golden cross retest. And someone said, "Oh, I don't see a golden cross on this one." Well, the golden cross took place a long time ago. Sorry, this is going to crash. I can feel it. I can feel it wanting to crash. So the golden cross took place ages ago. It had to have done, otherwise you wouldn't see the 50 exponential above the 200 exponential. And if we can we're just moving along a little further. All I'm saying is a golden cross retest, not a golden cross retest has taken place on this chart. If we can just move back again. I don't know why I decided to move it back. Go on. So that's a 200 exponential moving average anyway, that white line, and it was being retested, and we will just view that once again. And so with that is the opportunity for a V-shaped recovery on stocks. Now, you do have to reclaim all the other moving averages, which is 5,423. That is basically the center of the Bollinger Band above all moving averages, and that would give you the very likely possibility of a move all the way up to the previous high, if not higher, being a V-shaped recovery to a new all-time high. That's what this setup refers to. It's the opposite of what this 4-hourly refers to on Bitcoin, which is a Deathcross retest, which gives you the opportunity to see it move all the way down to where it came from and maybe even lower. So, as what I was saying at the beginning of the week, really, we saw stocks come down to this level. I took a major position on S&P, and I was optimistic on stocks, on crypto, because this is the leader of the financial markets. Now, the S&P is, if anything, the governor. It's the head of the snake. And if you're thinking about crypto, obviously you've got Bitcoin as the next part, and then below that is all the alts. So by trading any kind of altcoin individually, you do kind of have to I call it the domino effect. So you go from forex stocks. You can think about gold and precious metals, but commodities, but normally it's forex, stocks, Bitcoin, altcoins. And so to trade, thinking about that domino effect, who is who and where are they? The S&P is bouncing from a 200 exponential, offering the realistic opportunity for a V-shaped recovery. Now, again, the battle for that V-shaped recovery will take place, as we approach this 5,450, we'll call it. And if it was to reclaim that, then yeah, the V-shaped recovery is very likely. But the correlation is not great. So this is early days. We're more or less unchanged on the S&P at the moment. It's early, it's very early. Basically 0.1%. But the correlation doesn't seem to exist. Bitcoin down, altcoins down, S&P flat, but the position of both charts don't match. So the correlation was never really there throughout the summer. Well, stocks were rising, weren't they? They were moving up throughout the summer, and Bitcoin and crypto moving down. So look, I'm not saying that crypto has to follow S&P, but I would be more optimistic about how crypto will behave given the fact that the S&P is offering a V-shaped recovery. Not saying it has to follow, but it would be much better than if the S&P was, let's just say, doing a Deathcross retest on its own. Then you would be concerned. So look, we'll just have to wait and see. To be honest, I have no real reason to change my overall projection on the crypto market. I'm bored of saying it really, and again, I usually just base all my strategies around a weekly, and my weekly was planned all the way back in December when we got out of the altcoins generally after that alt season. So what we're looking at here is a continuation, most likely, maybe even finishing off the consolidation for the summer. Whether we come down to revisit these lows, whether we make a higher low or a lower low, doesn't really faze me or bother me particularly at this point right now. I think it's nothing more than opportunities leading into the big move next year, And all of these lows that we see for crypto and altcoins really are probably getting close to the last chances we have to pick up and develop a decent portfolio to sell next year. Just remember how crypto is volatile. Obviously, when it goes down, you see it go down 10, 20, 30, 40, 50%. Obviously, you feel like you made a big mistake, but the risk to reward is obviously enormous. Something like S&P, you might be like thinking, all right, I'll buy here, what's the risk? All right, 10% low to maybe a 30% high, decent risk to reward. Obviously, with crypto, altcoins specifically, you're talking, all right, I'll buy here, you see a retrace of 50%, but then a recovery that takes you up several 100%. It's the same kind of risk to reward measurement, obviously just enormous amounts of percent. That's why you trade crypto, no doubt, because you enjoy the volatility or at least the big moves. You just have to be prepared to recognize that 50% retrace from, let's just say where we are right now, is actually relatively normal for an altcoin. Just make sure that if you are dollar cost averaging, you do it incrementally with every major move, not all in one go, all in one place, because that, unfortunately, is going to be the worst way to deal with a volatile asset class like crypto and altcoins. Still stick to what I say though. Next year, probably around this time next year, moving into September, we should have seen brand new all-time highs for the majority of the market. And that's what you should focus on. The risk to reward over the next 12 months, as far as I'm concerned, is epic. Unless, of course, we see horrendous black swan events, which is going to crush all markets, and that would be a different. You probably have bigger problems anyway than crypto at that point. So look, we'll just sit, watch and wait. It's only Monday, and we've not broken out yet. The breakouts will be confirmed as far as I'm concerned once you've got above $64,000 closing above there using these 200 exponentials as building blocks from the 4-hourly. That would be the start of potentially the new trend on Bitcoin. I also believe quite strongly actually that the Bitcoin dominance chart is offering opportunity as well, or clues that an alt season is likely to happen, maybe even before Bitcoin has another big breakout, because we're still in that major box of resistance. I'll just show you that if my computer, I use the word loosely, my PC is able to show me that. We are in the box of significance, and we can get rejected at any part of this. This is still a bullish trend, it's still a massively bullish chart, but we're in this major area of resistance. And an alt season, if it were going to happen, could happen from this level. It can obviously go higher, but the first major opportunity for a potential alt season that exists here. We've got 1, 2 drives of bearish divergence, while in a major box of resistance. Alt season, I wouldn't say is unlikely at all. It could happen, and I believe that. I think there is evidence that we're already in an alt season. You just aren't recognizing it yet. If we fail and this breaks out, then absolutely, I'm taking some bitcoins out of cold storage and I'm banging them into altcoins here, because up at these levels, there's 62% dominance. I think it's very likely at that point that we do get an alt season. It's mildly likely here, very likely here. Either way, though, we do have setups on this chart to suggest an alt season is, well, potentially creeping around the corner. Look, if I think that we're going to break out in the market anyway over the next couple of months, it would make sense that we'll lurk around these areas until September or October. And if we break out and get up to these levels in September, October, brilliant. It will be absolutely as expected what I think is going to happen, which is big breakout towards the end of this year, and then next year, later on next year, huge, massive rally. And all these lows that we've been looking at recently will all be long forgotten. And for the most part, will be like little blips on a chart. And that's at that point, I'll get loads of DMs and loads of people will join my Patreon at that point. But at that point, it's usually too late. Anyway, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.